Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2. Wow, what craziness, what volatility. Out of nowhere, we saw the market just get absolutely crushed. Microsoft was trading 320, 428 and dropped all the way down to 421 before bouncing here. Great patterns today here. Remember, when we use based upon the way I look at the markets, I use multiple time frames. And what you're seeing here, okay, what you're seeing here is today we got the sell on the 30-minute time frame on the QQQs that correlated with the 15. Here's the sell on the 30-minute right here. And I'll show you. And then this push up right here, approximately, I think it was around the 11:30, 11:40 time period, absolutely kabooshed, right? The 15, so basically the 30 correlated with the 15, the 30 correlated with the 15, and then you got the 60 minutes still positive, right? And then what you got then after that, okay, you then have the push up on the 15 at exactly 1:30, 11:30, 11:40. The QQQs were trading roughly, I would say, around the 11 and a half, right? Look at the S&P's drop here. Wow. Wowzy, wowzy, wowzy. Look at this, right? And then what happened here, okay, then what happened, you saw an absolute kaboosh. The market dropped, the Qs dropped about over $2. The TQs dropped about $1. S&P futures on that we're trading around the 6,000, I think 6,011, 6,009, and they got absolutely crushed, okay? And if you see the patterns in what I'm showing you here, these patterns repeat themselves each and every day. And when you just take a step back and you take the alignment, the 30 correlates with the 15, then you look to short the first bounce on the 15. S&P futures just on this push up. Now, I'm going to show you something here. If I could show you the spiders here on the 30-minute, okay, the 30-minute time frame just reversed the sell, correlating with the 15. So this push up on the S&Ps that we just got to the 59.98. If you look at the 15-minute time frame on the spiders, okay, here's the 5-minute. So basically what happens is you wait for the push up, the 30-minute time frame on the spiders, okay, reverse the sell correlating with the 15, and then you short the first bounce on the 5-minute, and the S&Ps just dropped about 9 points right now. NASDAQ futures, TQs just dropped about 40. Spiders, let's see here. The S&Ps dropped about 60. So again, very, very significant pattern here on these patterns here. Okay. AMD, let's see what's going on. AMD got it 60. And so basically what you're looking at is taking advantage of these patterns. Now the SDSs reverse right to buy, okay? And if I could just type in the SDSs here, I want to just show you, okay? And I want to just actually show you the 15-minute time frame. Where's the 15? Look at this pattern right here, all right? You can see the overbought condition on the 15-minute time frame, all right? You can see the overbought condition on the 15-minute time frame, and the pattern right there was getting a push up into the negative MACD, It was an absolute Picasso, okay? Okay. Okay, so basically what you want to do here is you want to be able to identify the trade, identify the pattern, right? So now the 15-minute time frames on the Qs are getting overbought, but we just dropped on the NASDAQ futures about 25.30 here, right? I still think there's further more to go here. Okay, I still think there's further more to go. However, with that being said, okay, once these 15-minute time frames start turning down, I think the market's going a lot lower here. I think we're going to get absolutely cabooshed here. Absolutely cabooshed. Okay. And these patterns here, okay, okay, are really signaling that we have a lot of further downside move here on the index futures. And what we want to do, okay, is to be able to identify these patterns to the point that when we're trading the markets, we want to be able to be significantly involved. Okay, and again, what's important with this whole process, okay, what's important with this whole process is when you're trading, you want to be able to identify these patterns, right? So here it is. We got right now. I want to show you this other great pattern here. If I have the 5 and the 15-minute time frame, so there's the spiders here. So look at this pattern right here. Okay, so this is a pattern right here where the 5-minute time frame correlated with the 15, right? Remember, the 5-minute time frame reversed to sell. It correlated with the 15. Oh my God, look at these S&Ps drop. They just dropped almost 9, 10 handles here. NASDAQ just dropped 25, 30. Okay, if you look here, you can see the what time? 12. I'm just writing this down here. If you see the push up, right here, okay, after we got this new low here, right, we got this push up. I said, look to short the S&Ps at 95. You were getting overbought into the negative MACD. But on that push up, okay, the 5-minute time frame on the, look at these S&Ps drop. Oh my God. Okay. When you got this pattern, okay, you basically say to yourself, all right, you're getting a push up, S&Ps rally probably, I think, 14 points on the S&P. And then what you want to be able to do is you then take the push up in right below the 10-bar weighted moving average. Okay, granted, and the S&Ps dropped about 15 on that. Now, in all due respect, that was the news of Microsoft too. Okay, I'm not going to stand here. Microsoft caused the market on that to get absolutely cabooshed there. Okay, so I just want to let you know that. Okay, what's important, okay, is to recognize that when you're trading, you want to be able to identify that trading index futures, we trade anywhere between 8. We have anywhere between 8 to 12 great patterns in a day. Okay, and then if you look at the underlying ETFs, we look at the anywhere between 4 to 6 great trades in a day. Okay, between so let me just do this. Okay. Okay, so now we're just basically waiting here to see. Once I think these 15-minute time frames, you can see right here. So this is the first bounce on the 15-minute time frame after the 30-minute time frame correlated to sell. And I'm telling you, after that, look out below. All right, look out below. I think that what you're seeing here is the ability to recognize the power, okay, of using the multiple time frames, using the ability to trade the market in such an efficient way. All right, it really is a testament to understanding how to use the multiple time frames and using the power of the 15, the 30, and the 60, which I look at in a way that gives me the best way for me to see the market, which means I'm looking at the combinations of trends, buy reversals, sell reversals, correlations, and disconnects. Of those 5 conditions, there are 2 strategies for each, right? A buy and a sell divergence. So again, what I want to show you, let's do this again, going back to the QQQs here. Okay, let's go back to the 30-minute right here. So, so this pattern right here, okay, this pattern right here, okay. Let me just see. I hit B here. Okay, make sure that's frozen. Okay. So here again is when the 30-minute time frame reversed to sell. Okay, and then it correlated with the 60-minute, the 15-minute time frame. Once the 15-minute time frame, okay, got overbought. Okay, so the 30 reversed to sell. I think around 10:30, you got the first bounce on the 15-minute time frame at 11:30. Unbelievable. The Nasdaq futures hit 21,300 and dropped roughly in about 2 hours. Let me see. Yeah, roughly. Let me see here. 1, 2, 3, an hour and a half. Okay, they dropped 100 points on the Nasdaq futures. Very, very powerful. Very powerful. Okay. Again, being able to identify these patterns is what I've done. I spent nearly 10 years of my life building this software, and it's really important that I want to be able to teach each and every one of you, because the power of the software is you're able to identify market direction, be able to identify the moves in the market, and identify the way the markets move in such a magnitude that gives you the best bang for the buck, right? That you want to be able to identify, because one of my 5 keywords, I have consistency, discipline, patience, passion, right? And you got to be consistent, right? Consistency, discipline, confidence, patience, and passion, right? Those are the 5 keywords. And when do I wait? You wait patiently for the patterns to set up. Now, again, you know, with the Dow and the S&Ps and Russell and Nasdaq are pushing up to all-time highs here, you know, it's really important to understand you wait patiently. Like the markets are dead right now. I mean, there are times you get these big exuberant moves up and or down, but these patterns don't lie. The Russell today on the RTYs, I've been in sell mode, rising ADXs on the 30 and 60-minute time frames. Okay, they're negative, okay, and they're rising. But the most important thing is that when the 15-minute time frame reverses sell, I'm going to bring up the IWMs here really quick, all right? Because those of you who trade the Russell, the RTYs. So you can see I'm negative on the 30, I'm negative on the 60-minute time frame. You can see the ADXs are rising, the algorithm's negative. Now, if I just change the time frame to the 5-minute really quickly, I wanted to show you this here, okay? Look at the 5-minute time frame right here, okay? So if you look at the 5-minute time frame, this is the first push up right here, okay? And here's the second push up right there, and that was about 110. So right here, 110, right here, about 125, 110, right here. It's actually 105 is the push up. And you can see the drop here, pushed up again, and it dropped again. Okay, so why is it dropping, right? Because the 5-minute time frame, okay, let me just do this here. Let's do this here. Let me just change this here on the 5-minute. Okay, here's the 5-minute time frame. So once the 15, look at this beautiful short. Here's the other short here. It never told you to be long the RTYs, right? It never told you to be long the RTYs. Let me just show you the diamonds. If you're trading the YMs here. So the YMs are negative, okay? The YMs are negative on the 30 and 60-minute time frame. And if this is a push up here, and then here's the other push up. So the 5-minute time frame correlated with the 15, the 30, and the hourly. And then what do you look to do? You look to short the first bounce. Okay, you look to short the first bounce on the 5-minute time frame. It's an absolute Picasso. Okay, and I'm telling you this because what's really super important with this whole pattern and identifying the structure here is when you have these patterns, right? When you have these moves, you want to be able to see that when you're trading the markets, okay? When you're trading the markets, you want to be able to recognize the situation, right? So again, by trading and looking and understanding the patterns, you'll be able to really formulate the conclusion of which way. Yesterday, I had someone call me and said, "Steve, can you help me? I got kind of beat up on the RTYs." I said, "What'd you do?" He said, "I bought it all the way down." I'm like, "Well, the software really never told you to buy it once, you know?" And he said, "Yeah, I know, but." He said, what should I have done?" I said, "Well, when the 15-minute time frame reversed to sell and it correlated with the 30 and the 60-minute time frame, I wait to short the first bounce. I'm not looking the bottom pick. I'm going to look to short the first bounce on the 15-minute time frame." And sure as bananas, what happened? Right? We got the bounce on the Russell on the 15, and then it dropped towards the end of the day within the last hour of the day. It was a magnificent setup, a magnificent pattern, and that's what we strive to do, right? We want to be able to be on the right side of the market, to be able to identify these moves, and to be able to identify the patterns in which we're trading. Okay, but again, it's really up to you. Okay, to really understand the market direction, understand the patterns, understand everything that we're doing as far as where the markets are going, right? Because in the end, if you want to be consistent and you want to be able to be profitable, right? You want to be able to recognize the moves, be able to recognize the patterns, but more so, you want to be able to recognize the strengths of when the markets are moving, when the markets aren't moving, and moving in a direction that's going to really help you to the best part, right? Um, so with that, let me just see something here. Come on. Okay. So with that, what we want to be able to do is to be able. Right now, the markets are really, really quiet, right? The markets are really, really quiet here, and Microsoft just rallied $6 off the lows here. Apple just dropped 40 cents. Let me just see something here. Okay, so it's very quiet. I still think the 15-minute time frames are going to roll over here. I do think there's an outside chance I think a very good chance we're going to make new lows here. Okay, that we're going to make new lows here. And I think what's really important here is that we recognize that the markets are very, very quiet here. Very, very quiet. Apple just dropped 50 here. That's going to hurt the market here for a bit. All right. Does anybody have any questions at all? The markets have had this exuberant run, and it's good to get a pullback. I'm thinking 59.25, 59.30, 59.10, 59.20, and then we're going to get another push up. You take the measured move from there to there, eventually get up to 60. My ultimate target is going to be the 65.55 range on the S&P. 65.55. Let's see here. Okay. All right. What's this thing? 18, 7. All right. Okay. All right. Okay. If anybody has any questions, you can text me or call me at 914-500-7484. Okay. If anybody has any questions at all. Again, it's all prudent. It's all up to you to be able to recognize the patterns, understand what we're doing, and understanding the market direction, right? And this is what I do. I build technology to give to you, and that's why I do a live stream each and every day from 9 to 4. I'm teaching throughout the day, but more importantly, I'm explaining the patterns. I'm guiding you all, and it's really up to all of you to take the time to learn. I do take questions. I speak to everybody at the end of the day. But what's really important is that your success is something I really look to really help you with, right? Because my legacy depends on your success. All right. We got Bitcoin that was down about 2,400 points. Can you believe this Bitcoin hit like 94,000? What was it? 94,400, say. And then boom, down 5,000 points. We saw MSTR drop 50 off the highs. Coinbase down 30, 40 off the highs. So again, it's really a testament to the markets that we have. And you pick your spots, you pick the 30-year bonds today. If you're trading 30-year bonds, beautiful buy reversals today. I use the underlying ETF, the TLTs. I look at the GLDs. I look at oil with the USOs. When you're trading the RTYs, look at the Russell. If you're looking at the YMs, you look at the diamonds. And I teach these correlation studies. And what I want you to realize and understand, okay, is that when you're trading, be consistent, right? When you hit your goals, so many people today hit their goals and they didn't look back, right? And I love that. I really, really love that, because that to me shows the discipline that they have. They hit their goal, they stopped, and guess what? They just moved on, right? And then they go into paper trading mode and they start, really characterizing and looking at the markets in such a way, okay, that gives them the ability. Here we go. S&P futures now hit the high right there. They're down about 12 right now. NASDAQ futures hit the 21,110, are now down 50 handles from there off that 15-minute time frame. A beautiful push up on the 15. Okay, the 30-minute time frame on the spiders, reverse to sell, correlating with the 15, and then you short the first bounce on the 15-minute time frame.
We have a comment, Steve.
I'm sorry?
We have a comment.
Oh, okay. I don't see it. Steve, could you explain more how to use bigger time frames with small ones, please? Sure, Sev. That's a great question. So the way I look at the market, Sev, right? I look at the 15, the 30, and the hourly. Is that what you're referring to? And then I use for example, I just told you that the spiders reversed to sell on the 30-minute time frame, correlating with the 15, right? Oh my God, Amazon just got killed. Okay, Meta just got killed. Despite everything, just got kabooshed. So when we got the push up just now, okay, the TQs, look at the NASDAQ get killed here. Okay, when you got the push up, okay, when you're looking at the 15 to 30 and the hourly time frames, you see when the 30 reversed to sell, correlating with the 15, you short the first bounce. Look at the Qs here. Look at the Qs here on the 15. Well, that's right here. Look at the Qs on the 15. So you look what they did just now. They just got up to the 5:11:30 mark. Okay, the 5:11:30 mark, and now look what happened. They just dropped. Look at the 15s, right? So again, using the combination theories, okay, and then you could use the smaller time frames, but this was a perfect pattern off the 15. Like for example, the IWMs. The IWMs reversed to sell, right? Look at the S&Ps. They're gonna make new lows here. S&Ps are gonna make new lows here, right? Apple just dropped 70 cents off the high. The TQs just dropped here. Everything's set up perfectly. Everything's set up perfectly. When that 30-minute time frame on the Qs reverse correlating with the 15, okay, on the spiders, then you short the first bounce on the spiders. They just dropped 12 handles. Beautiful pattern. Beautiful pattern on the spiders. Okay, beautiful pattern. Okay, and then what you do is, depending on the strategy, Sev, okay, you use the smaller time frames, the 5 and the 3 minute and the 5 minute. Okay, that's what you end up doing. All right. Does anybody have any other questions? Apple just dropped. Nvidia hit a high of 149 today on the dot, down 2.5. Look at the Qs go. Nasdaq's down almost 100 points since we've been on. I told you those 15-minute time frames are going to start rolling over, and I hope you got short there. Okay. What else? What else? Beautiful, beautiful, beautiful patterns. A Picasso, a Picasso, a Picasso. If I could just show you this one pattern right here on the SDSs, you can see how the SDSs got oversold right there. Look at the S&Ps, they're close to making new lows here. Okay. All right. If you see here the pullback on the SDSs into the positive MACD, into the rising ADX, this is an absolute Picasso. Okay, an absolute Picasso. ADX is rising, the MACDs are positive, and they got the deep oversold condition. This is something you should take a picture of. Look at them. They're going to make new lows here. They're going to make new lows. I told you this is, oh my God, Apple's down over $1. Okay, Apple's down close to $1 here. All right. So with that being said, if you have any other questions, please feel free to call me, okay? 914-500-7484. Again, I love being here. I love teaching each and every one of you. This is exactly what I want to do, to be able to give you S&Ps, new lows, NASDAQ, new lows, okay? Have a great day, everybody. God bless you all. God bless the United States of America. And I'll see you here next Tuesday at 1:30 on Back to the Futures. Have a great day.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.